affect real property would be matters such as governmental regulations, eminent domain, things like that, zoning. So they affect your use and enjoyment of the property, but they do not encumber the property like an easement or a deed of trust or a CC&R. So they're not an interest in real property that encumbers the land. So that would be an exclusion. Another exclusion might be creditors' rights, which we usually don't worry about with the standard residential transactions, but that's a big deal. And the creditors' rights is where the bankruptcy court might go back and void a transfer because that particular transfer resulted in the debtor in the bankruptcy proceedings becoming insolvent. And it was maybe something like a subsidiary of a corporation was forced to encumber their property as a guarantee for a transaction that the parent of the corporation wanted to make. So the property of the subsidiary was encumbered. The subsidiary did not get any of that money that encumbered their property, and it benefited the parent. That might be something that a bankruptcy court would eventually decide that's a fraudulent transaction, we void it, and so therefore the title that passed doesn't pass. That would be a creditor's rights issue. And so, even though you would assume that it'd be covered, we spell it out that it's not covered, and that's an exclusion. Exceptions would be, like we talked about, an unrecorded easement. So you get standard coverage, and you would expect that you'd be covered for all easements, right? But it's accepted. They would accept an unrecorded easement, or they would accept unrecorded lease, or they would accept, as we discussed before, matters disclosed by survey. So there's a real distinction between exclusions and exceptions. Exceptions, you expect it to be covered. Exclusions, you wouldn't. Now, what's interesting about the homeowner's policy is they've done things that are very new to the industry, because some of the coverages in a homeowner's policy are going to be coverages for matters that would be exclusions. Some of the coverages in a homeowner's policy are matters that would be considered exceptions normally. Some of the coverages in a homeowner's policy are for post-policy events. So the thing always in title insurance industry from 1868 until like 1989 was that we only protect against pre-policy events. We can't protect against something in the future. So that if you buy the property and then somebody forges your name, you're not covered for that. You'd be covered if they forged a name prior to, but not after. Or you buy the property and a neighbor, after policy date, builds something that encroaches onto your property. We're not going to protect against that. That's a post-policy event. Well, the homeowner's policy will protect people against post-policy forgeries. It'll protect people against a neighbor building encroachments after the policy date. It also offers assurances for certain zoning violations, certain violations of the MAP Act, inability to get permits based on certain violations. So it's protecting you against governmental regulations and zoning and so forth. So it's offering coverages for exclusions. So many of the 32 coverages that are set forth in the homeowner's policy are very small and subtle, but some are very significant. And another nice feature of the homeowner's policy is that it's in plain English, and then some things are better defined. All the title insurance policies will assure you that you have access to your property. But the thing is, they don't say what kind of access. So if you have a standard policy, you have assurances you have access. So if you can get there with a donkey, that might do the trick from a title insurance point of view. So now, and you know, after, you know, between the time of 1868 and 1989, enough people complained about it. So with the new homeowner's policy, it assures the insured that they have both pedestrian and vehicular access. So it may look subtle, but that's a real important distinction. So you don't have to worry about the fact that you can't get there with your car now, whereas with the others you would. And so another really nice feature of the CLTA, ALTAs, both homeowners policy, is it protects against any damage to improvements if somebody exercises easement rights and they pass beneath the improvements. And in Santa Barbara, we have that. I've worked on many transactions where someone discovers there's a little, you know, pipeline that passes beneath their house that's not recorded, or a sewer. A lot of the older neighborhoods have all sorts of interesting unrecorded matters that affect the ownership of the land. And that's one of the nicest features here of the homeowner's policy. So it's only 10% more in standard coverage. And if you're, and as you know, your car contract defaults to the homeowner's policy. So I highly recommend it, run where it's available.
You're mentioning permits.
Yes.
That covers. How does it affect us then, for instance, we have the zoning reports, and a lot of times we go out there and the zoning inspector comes out to the house here in the city of Santa Barbara, and now they say, well, this wasn't permitted. Can we then go back to the title company and say, you know what? We had a policy that was fine, and now we're finding out that there's an unpermitted deck or something like that, will it be covered? In what way?
If you discover something, you know, through the application for the inspection or whatever, it's important to note that you'd want to disclose that to the title company and work it out. Make sure that they agreed to cover it or that they agreed not to. And the reason for that is all title insurance policies will not offer any protection to the insured for matters known to the insured that were not known to the title company. So if it's something that would have been covered, let's say, by a homeowner's policy, and that offers some coverages for permit issues. And so if you have to remove your improvements or something like that because it's in violation of a permit, you have some coverage which is subject to deductible and maximum limit of liability. But if you know that and you don't tell them, then one of their ways to deny the claim is it's something known to the insured but not known to us. If they accept it and say, you know, we understand this, we're willing to accept the risk, and we offer you these assurances nonetheless, then you're protected.
No, but again, a lot of times we've seen, we'll see a house that sells,
Mm-hmm.
and it goes fine through the zoning.
Right.
Okay, so the homeowner at the point feels that he's covered.
Right.
Now zoning enforcement comes in there and says, you know what, we now find out, whoever's
Yeah.
doing it, this is not covered.
So
So
if,
you go back to the original? Yeah.
yeah, if it's prior to close. If this happens after the close, then he'll be covered if he has a homeowner's policy. So, anything you discover before the close, if it's something that would be covered by a title policy, now this is something that would be a claim against it. If you know it and you close anyway and the title insurer doesn't know it, they can use that as a policy defense. Does that answer your question? And if it happened, you discovered after the fact, if it's covered by the homeowner's policy, you'd be covered. The standard coverage policy does not protect you against governmental regulation type things like that.
How long?
Oh, it's a good question, but I had a...
How long? Mine is kind of the same.
Same, okay.
How long? Because if we're dealing with a 30, 60-day escrow, and something takes 2 weeks, and then we've got, you know, X, Y, and Z, all these things that are supposed to happen and be remedied before the close of escrow, how quickly can a title insurance company respond to a claim and actually remedy it?
Okay. A title company issues the insurance when the transaction closes, so that's really, they can't have a claim prior to. The things can happen that'll lead to a claim prior to.
Right.
But if you discover something and you're worried that it's that it would be covered by the policy normally, but you know about it now, just bring it to the attention of the title insurer. And if it's being remedied, then it's being remedied and the title insurer knows that, and then they might be in a position to issue that insurance. You know, without any deletions of coverage.
And what's typical deductible?
Well, there's four coverages in the homeowner's policy that have deductibles, and the deductibles run from 1 to 2.5%, but the maximums are going to be like $2,500 to $5,000. For the two are $2,500 the maximum deductible. 2 of them have a maximum deductible of $5,000. And all 4 of them have maximum liabilities, and we'll look at that here in a little bit. But so it's not, none of these, of the 4 that have deductibles and maximum liabilities, 3 pertain to governmental regulation type things. 1, which is very good coverage, pertains to discovering that your boundary walls and fences encroach onto the neighbor's house, and that has a deductible. If you discover your improvements encroach onto the neighbor's property, there's no encroachment or maximum liability for that. So those are some of the better coverages that are in the homeowner's policy. They have substance, even though some have deductibles and maximum liabilities. Yes, and I'll come back to the speech.
My how long was years down the road.
Yeah, for your coverage.
In Randy's scenario, we find a real common in the city of Santa Barbara.
Mm-hmm.
Oh, we got all the papers, we close up, everybody's merrily down the road. 3 years later, some neighbor bitches about something.
Yeah.
All of a sudden, oh wow, the city comes out and does their real job this time, and now you got a big problem.
As long
So
as you
how long
own
are
your
you
interest
covered?
in the property, you're covered.
Oh, okay.
So that's one of the beautiful things about title insurance. If you compare the title insurance policy to other insurance policies, the other is you're renewing every year and the premiums are being adjusted on an annual basis. When you buy a title insurance, you're done. You don't make annual payments. And that's going to cover you for so long after as you own the property. And then if you pass and goes on to your descendants through probate or whatever, they're covered too. So if you own the property for 52 years, that's how long your coverage will last. Then you sell it at the end of 52 years and you make representations to the buyer based on your understanding of your title insurance policy. You're even covered for that. Al?
But not on the basic.
No, all policies.
All.
All policies protect the insured for as long as they hold that interest in the property.
Getting back to Randy's question, and I'll try to see if I can explain this clearly. Buyer buys his property. He now owns it. He has a title insurance policy. The city's come out, they've done their inspection, and there was no zoning violations found, or
Right.
few, they were corrected. He goes to sell the property. Now some new violations have come up that were not the result of
Yes.
the